Hi, how are you? Duncan Yells from Property Wealth Partners. Today I just want to go through a little video with you and have some thoughts in and around the subject of buying a property and the real costs of buying that property and the costs of actually holding the property. I've got a little rule that I call the 2% rule. How does it work? Okay, when we go and buy a property, let's say we buy it for $500,000. Now that's not out of the question at all for a property in this market today. When we buy it, we've got certain costs that we have when we first buy, the setup costs, and then we have these ongoing costs. Now they're anything through from property management to insurances to repairs and maintenances to your interest rates that you're being charged by the bank, and for the money that you're using out of potentially your line of credit or your equity pool. When I talk to a client in and around the costs of holding an investment property, I use the rule of 2%. Why? It's a really good rule of thumb in and around looking at what that property will cost you each year. Now we know right now that interest rates are at historically low rates, even sub 5%. So we know that that's one set cost that everyone's got for their property. But property management can vary a little bit, so can insurances depending on where it is, repairs and maintenance depending on the age of the property, etc. There's costs associated with the property. In reality though, if we use a rule of 2% of the value of the property, so for a $500,000 property, I would be suggesting to a client that they allow 2% or $10,000 each and every year that they should allow to be coming out of cash flow from that property to actually support its costs. Now yes, I also appreciate that then we're going to have tax benefits and all this depreciation coming back into the property. But from a cold hard cash point of view, money coming out of our pocket on a week to week, on an annual basis, for a property that we purchased worth $500,000, it will cost us about $10,000 in costs. Now, just to add to that, there's currently the 5% rule, being your interest rate being paid. So if we combine the two together, we've actually got about a 7% per annum cost of owning that property. 7 5s to 35, $35,000 per annum is what that property is actually costing us to hold on an annual basis. I hope that makes sense. It's a great little rule of when you're going out there and looking for a property to buy, what's the real cost of actually holding it. Now, it is that rule of thumb, as I said. What I found though, over the thousands of clients that have bought property, hundreds of clients that have bought thousands of properties over the last 10, 12 years that I've been working with them, is that it doesn't matter whether the property is regional, city, suburb, whether it's $500,000, $1 million or $200,000. The rule still applies. The 2% rule will always be in there, and it's a great rule. A little add there, what does that mean for your rental returns on the property? If that property is costing you 7% per annum to hold, and you're getting 7% rental yield, gross rental yield, what is that property actually putting in your pocket before tax on a yearly basis? And my suggestion right there with that sum, $500,000 property, 7%, get 7% return, very possibly that's a cash flow neutral property. So it's not taking it out, it's not putting it in. Now yes, again, the tax benefits are there. If that property was only giving you a 5% yield, that is a truly negatively geared property. You're actually taking cold hard cash that you've earned and already paid tax on out of your pocket each week to support that property. And conversely, if that property is giving you 7.5, 8, 8.5, 9 or even 10% plus as a rental return, gross rental return, that property is actually putting cold hard cash into your pocket. I hope that's been a help. The real cost of owning a rental property. Thanks. I'm Duncan Yells from Property Wealth Partners. I look forward to sitting down having a chat with you one day in and how we can help you develop your property portfolio. Thanks.